Impatience. Relativism and recency are confusing enough. But when impatience accompanies them, they can compel investors to abandon even well-planned strategies. As mentioned, most investors think 5 years is a very long time and 10 years an eternity. However, when calculating the returns of risky assets, the former is no more than noise, and even the latter is insufficient to reach a meaningful conclusion. Take an example. The S&P 500 index returned -1% per year over the first 10 years of this century. Many investors consequently lost faith that risky stocks will ultimately outperform safe U.S. Treasury bills. Similarly, U.S. large-cap and growth stocks both underperformed long-term U.S. Treasury bonds from 1968 through 2008. The long bond rally has muted potential returns of stocks and reduced yields to a historical minimum. But investors should not abandon the idea that these risky assets should outperform in the future. Coming to international investing, typical investors willingly relinquish carefully planned global diversification strategies when international stocks face inevitable periods of underperformance. When investing in risky assets and factors, investors should know they could underperform for long periods. As this course shows, a chance always exists a factor will produce a negative premium, no matter how long the period. Without such potential underperformance, investing in stocks would have no risk and therefore no premium. Investors should accept a basic concept of diversification. Certain parts of your portfolio may behave differently from the portfolio itself. Know your tolerance for tracking error risk because it will help you stay disciplined. If you have low tolerance, the equity portion of your portfolio will resemble the S&P 500 index. You can choose a market-like portfolio, but then it will have little differentiation across asset classes or factors. A prudent investor strikes the right balance between avoiding and accepting the tracking error and has the discipline to stick with a diversified, active strategy. Discipline is what will ultimately turn you into a successful investor.